Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, and let's figure out what has happened as we move into essentially a fresh month starting Tuesday of next week. All that being said, of course, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. My membership section on YouTube is, of course, live. So if you're interested in that, definitely check it out. The link is down below where I share my intraday thoughts on Tesla. And of course, I do use TrendSpider to chart. If you're interested in using TrendSpider yourself, I do have an affiliate link down below. But moving into a Tesla looking like it'll be, or rather closing the day up pretty much 4.3%, closing at $266.64, which of course compared to the market, Tesla for the most part was actually in line with QQQ, up 1.75%, but towards the end of the day seemed to very slightly outperform. So a very slight outperformance on Tesla today compared to the market, which is always good to see. Now, what does this mean? So there's a few things. There's good news and there's bad news, right? There's a mix of the two right now, and it's, in my opinion, an area that you'd want to wait for it to kind of give confirmation, if that makes sense. So let's go over that. Let's start off actually with the 65-minute chart first. So it's pretty simple here, right? So we came down obviously after earnings, came back up, came back down pretty much to the exact same level just yesterday. And even though it looked pretty damn bearish, and one thing I guess I should have noticed honestly was the fact that if there was a spot to get one more bounce in to have a chance to go up to 275 or 280, this literally was it. Why? Two reasons. Number one, right? Let me take off this 21 EMA for now. First and foremost, right, potentially, obviously a double bottom, right? So from here, move all the way down, come up, which was the where we just came up not too long ago, come back down pretty much at the exact same level, bounce from there. And as long as we break, this is where it's a little confusing. It's either, you can argue that it has to be 272 because that's how high we actually technically bounced to, or you can argue that the neckline, if you will, is around $270, right? You can make an argument both ways, but for now, let's just say it's 270. If we break above this 267 level, and especially 270, and we break above that neckline, this double bottom pattern essentially plays out, and then from there we can actually move up all the way to somewhere around 280 roughly, right? Kind of the rough way you determine how far a double bottom can go is what you do is you take kind of the measurement, if you will, of the neckline to the bottom, which is something like this, and then assuming you break out of the neckline, which again somewhere around here, you can see it brings us up to around $280 per share, right? So again, it's a very small bullish pattern. It's not a massive double bottom, right? But nonetheless, a potential. This is a little bit of a double bottom on the 65-minute chart or 1 hour chart. So keep that in mind. That's pattern number one, right? The fact that we are doing such a double bottom situation here. And so far, it's looking like it kind of wants to move higher. You have the RSI still looking pretty decent on the 1 hour chart. The MACD is starting to cross a little bit bullish over here. It's looking kind of promising, not looking too bad. And on top of that, you can see these two red lines. We were in this descending wedge that's so far breaking out to the upside. You can see this green candle right here broke up above it, right? We got, we started over here, rejected many times right here, 2 times in a row, followed by this massive green candle that went above it. Of course, we're still getting rejected by that 267/21 EMA level, which we'll talk about more on the daily. But as we broke out, we got rejected, but then came down to retest it. And this time we took what was a resistance and turned it into a support, which is so far looking kind of promising. That's kind of good. That's what the bulls want to see. So that's the bullish aspect of it. The bearish aspect as we move over to the daily is the fact that, well, plain and simple, we're still getting rejected by, of course, the 21 EMA, right? We closed once again, similar to this candle just a couple days ago, this green one here. We're pretty much closing right at that 21 EMA. Again, not a convincing close above it. We're still getting rejected by that 267, ish and a half-ish level. That's still happening, right? So we still have that resistance that we need to break above. And in order for this double bottom pattern to play out, I also really want to see 270 break. So that 267 to 270 level combined with the 21 EMA is still a pretty major resistance that we clearly are struggling to break, but it's looking like it's really giving it an actual attempt here to finally break through it. And as I always say, Mondays and Fridays tend to rhyme. Of course, not every single time, but usually like maybe 6 or 7 out of 10 times it rhymes. What does that mean? If Friday was a green day, Monday tends to be more often than not a green day. Not necessarily to the same level of green, doesn't have to be 4%, could be more, could be less, but usually the momentum kind of carries through and vice versa. If it's a red day, usually the momentum carries through to Monday and also ends up being a red day. Again, not every single time or else it'll be way too easy, but fairly often, like a 70% chance that I see that happen, right? It's more often than not. So that's kind of what I see happening right there. But again, until we break 267, the 21 EMA, and ideally 270, and really break above this neckline and really start this double bottom pattern out and actually play it out, this is still not a super convincing area, right? It does seem like it wants to, but until those levels break, it's still something that I would warrant caution on personally. I have entered a small bullish position. I did a cash secured put because I do think it is going to run. But with that being said, I also still have sold calls. All of them are expiring next Friday. My sold calls are sitting all the way up in $280. So still has to have about a 6% run to even get to that. Plus, of course, extra premium. So, that's perfectly fine with me. And if I'm forced to sell, I'm selling not only to keep the premium, but I'm also selling all those shares at a profit. At a level that I personally think we're also going to get rejected at regardless, even if we do get up there. So to me, I view it as a win-win. If we fall, phenomenal. I'll get to buy more shares. I'm happy either way it goes here. And that's kind of the way I like to play it, where no matter which way direction it goes, I'll win in one way or another. You know what I mean? That's the way I like to look at it. Now, on the daily, once again, the MACD also not looking atrocious now. Like, it's still obviously looking kind of bearish, but you can see the red line is starting to get a little bit smaller, the little bar, right? It's starting to kind of get a little bit smaller. It's not continually getting larger and larger, which is good. You can see that the green to red line, it's starting to not point as down anymore, right? It's starting to slowly curve now, which is good to see. Maybe the momentum is slowly starting to shift. Personally, what I think will happen with this MACD here is I think that we'll come up, maybe touch the red line as we move up to 280. Assuming we move to 80, I think the green line will come kind of close to the red line, kind of like what it did right over here. And then I think it'll get a rejection, and that's where I think we'll get that rejection on the actual chart itself. And I think that's where, the move to 240, potentially even as low as 220s-ish, might actually follow through. I still think we'll see 240s, and I personally don't even think that 220s is out of the question. But like I said, I also do think it'll take time. I don't think it's going to happen overnight. I did say this many times, and I personally, my kind of rough guess right now is probably closer to the end-ish of August or September, sometime in September, something like that. Somewhere around that time frame is where I think that we'll probably start making that way to 240, maybe 220s, probably sometime in September-ish. And that's kind of my overall time frame. And for the most part, I did talk about how I think that for the most part we'll go kind of sideways-ish for the most part for the majority of August. And I think it'll be not super eventful, in all honesty, as kind of lame as that sounds. But that's kind of what I foresee there. Now, moving in, of course, also to do the volume price here. So you can see we are, of course, still kind of bouncing around this area of the high volume, but we still have decent volume above us, right? We still have okay volume above us. So we definitely, we want to be breaking well above 283. Like, we had this small little break off above 283, which of course earnings completely ruined, but we really want to be breaking above this kind of 283-ish level, which is of course a massive resistance that we had several times, which is where that not massive, but decently large volume kind of ends at. So you really want to break through that in order to start really getting a move higher. So again, I don't think we'll do that yet. I personally think that this downtrend is not complete. I personally think that we'll just essentially get a dead cat bounce. I still think that there's a possibility for 275, maybe 280, but I'd be surprised if we don't get rejected there and don't ultimately go a little bit lower past where we have been consolidating here overall. Again, just a guess. I could be completely wrong, obviously, right? You never know for sure in the market, right? Nothing is guaranteed. That's the first lesson I'm sure you need to learn and understand, right? Nothing is ever guaranteed. But that's kind of what I am seeing. But this is a market you want to be careful with, because we had the PCE numbers come out this morning, right? The market obviously had a beautiful rally off of it, right? SPY, for instance, yesterday had an atrociously looking bearish candle. This is a massive bearish engulfing candle on SPY. It looked very bad, very bearish, very, very not good. The MACD even crossed, and ultimately it didn't look very, very good. But today, if you're someone that entered shorts at the bottom of this thinking, oh yeah, tomorrow's going to be, red for sure. It's a massive bearish engulfing candle. It has to be red. There's no way it's not. Well, you probably got smoked today, because obviously it clearly was not red today. So, keep that in mind, guys. That's very important to understand, right? So you want to be very, very careful with these kind of situations. SPY is also still kind of hugging the top of this overall channel. You can see, right? It's really, really hugging the top of it. So who knows what will happen from here? This is definitely a place to be very careful with, but, also very cautious with. So, you want to take a step by step, in my opinion, with the market like this. That's kind of treading on thin ice over here, in my opinion. Now, that's kind of overall what I am seeing right now, ladies and gentlemen. There's a new little thing I have here that TrendSpider just added, which is pretty cool, called order blocks. So let's go to the 65-minute chart. So essentially it shows a buy and sell order blocks. Right now it's only showing massive order blocks in the 300s and massive order blocks for buys down all the way in the 165s. But if you go to the 65-minute chart, you can see a little bit more information, a little bit more detail, where let me remove this volume by price over here, but you can see massive buy order block, which is the this green one here. Ignore this green, this is my own one, right? Ignore this one here. We want to look at is the one down here. This is a buy order block, and these are kind of bluish, kind of dark bluish ones, purple ones are sell order blocks, right? So we have two of them. One you can see also sitting all the way up pretty much at 300, which is roughly where we had that massive sell during earnings, but you can see order block is right above us right here. This is that level I told you guys that we need to break, this 267 all the way up to 270 level. We clearly have a sell order block sitting around there as well. So just really something we need to push through. Crucial. But I think if Tesla can push above 270 one more time, I think 275 to 280 is pretty much guaranteed. I do believe that will almost guaranteed happen as long as 270 can get broken. But that's kind of what I am seeing right now. So let me know what you guys think down below. Before we end off the video, let's take a final quick look on options. I want to make this kind of a habit. I want to take a look at options flow together at the end of every single video. I think it's just a good habit to have, right? It doesn't hurt at all. And you can see options flow is definitely starting to turn a little bit more bullish, right? You can see definitely a little bit more bullishness over here. Some bearishness coming in towards, much later dates with some bullishness as well. But for the most part, it did flip a little bit from, being bearish to a little bit more bullish now. A lot more green and larger green bubbles. Again, the larger the bubble, the more premium there is, of course, in that bubble. And there's also a lot more green ones than red ones as well. There is some red ones, so it doesn't seem like it's pure bullishness. There is definitely some skepticism here for sure, but it does seem like it is leaning a little bit more bullish than bearish as of right now. So all that being said, thank you all so much for watching. Hope you have a great weekend. And of course, as usual, I'll see you tomorrow. Not tomorrow, Monday. Peace.